Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about PICC Group interim report. The People's Insurance Company Group of China Limited offers a diverse range of businesses and services, including insurance products, plus motor vehicle insurance, plus agricultural insurance, plus accidental injury and health insurance, plus liability insurance, plus corporate property insurance, plus life insurance, general, participating, and universal, plus health and accident insurance, plus medical insurance, plus participating endowment insurance, plus sickness insurance, plus nursing insurance, plus disability, income loss insurance, asset management services, reinsurance, business, internet banking, research and development services, transportation services, technology services. The significant surge in PICC Group's stock price by over 86.83% in the past year can be attributed to several key factors. Firstly, the company has experienced substantial earnings growth, with a 67.1% increase in earnings per share (EPS) for its flagship subsidiary, PICC Property and Casualty. This growth is driven by a 39% rise in its property and casualty segment and a 50% growth in its health insurance segment. Additionally, PICC Group has seen an increase in premium income, with a 4.8% rise in original insurance premiums for the period from January to October 2024. The company's strategic business initiatives, such as the establishment of PICC Health Management Co., Limited, and the implementation of a new business model focused on insurance plus risk reduction service plus technology, have also contributed to its success. Furthermore, positive analyst ratings and upgrades have boosted investor confidence in the company. Morningstar raised its fair value estimate for PICC Group to HKD 4.8 per share, while Morgan Stanley increased its earnings per share forecasts for 2025-2027 by up to 4.3%. The upgrade of AM Best's outlook on PICC Hong Kong from stable to positive has also recognized the company's improved market presence and gains in reinsurance. Overall, these factors have combined to drive PICC Group's stock price upwards, outperforming both the Hong Kong insurance industry and the broader Hong Kong market over the past year. The primary drivers of revenue growth or decline can be summarized as follows. Revenue growth drivers. The company has experienced significant revenue growth due to the expansion of its insurance business, particularly in motor vehicle and agricultural insurance, which saw increases of 8.7% and 17.4%, respectively. Additionally, investment assets and total investment income have grown by 7.2% and 40.2%, respectively. The company's internet business has also seen increased market share. Revenue decline factors. On the other hand, certain segments have experienced decline in revenue. Accidental injury and health insurance underwriting profits declined by 44.1%, while liability insurance underwriting profits fell by 47.3%. Participating life and universal life insurance revenues also saw significant declines of -60.3% and -3.1%, respectively. Overall, the company's diversified business model has contributed to its revenue growth, with a strong performance in key segments offsetting decline in others. Net income for the company increased by 32.3% to RMB 24,455 million, with a notable rise in net income from RMB 31,489 to RMB 36,155, representing a 15% increase. This growth can be attributed to improved operating performance and scale of assets under management. Profit margins also experienced fluctuations. The combined ratio decreased by 1.4 percentage points to 94.8%, while the non-vehicle insurance business combined ratio dropped by 0.1 percentage point to 95.7%. However, the net profit margin increased from 10.9% in 2024 to 11.2% in 2025. The reasons behind these changes are multifaceted. On one hand, improved operating performance and scale of assets under management contributed to the increase in net income and profit margins. On the other hand, challenges in claims cost management and underwriting profitability, as well as declining government bond yields affecting asset returns, led to a decrease in certain segments' profit margins. Overall, the company's financial performance shows a mixed trend, with both positive and negative factors influencing its net income and profit margins. The company is generating a significant amount of positive operating cash flow, with net cash inflow from operating activities increasing by 26.6% year-on-year. The net cash flows from operating activities reached RMB 74,800 and 45 million in 2025, representing a notable increase of plus 6.9% compared to the previous year. This substantial growth in operating cash flow is a positive indicator for the company's financial health and ability to generate funds from its core operations. The company's debt level and interest expenses have undergone some fluctuations. Notably, the bonds payable have decreased significantly, with a reduction of RMB 8,624 million from RMB 50,132 million to RMB 41,508 million on page 115, and another decrease of RMB 9,468 million from RMB 51,176 million to RMB 41,708 million on page 119. Meanwhile, interest expenses have also decreased slightly, with a reduction of $10 million from $2,012 million in 2024 to $2,002 million in 2025. Overall, these changes suggest that the company has made efforts to reduce its debt and lower its interest expenses. The company's financial performance varied across different segments and regions. Notably, the property insurance segment struggled due to extreme weather events, while life insurance faced challenges from declining government bond yields and interest rate spread loss. The health insurance segment also underperformed, with a lower income compared to other segments. Additionally, asset management was relatively weak, with a low segment income. On the other hand, non-life insurance stood out as a strong performer, achieving significant segment income and revenue growth. Headquarters and others also showed resilience, with a notable increase in segment income and revenue. These results suggest that the company's focus on non-life insurance and its support functions may be paying off, while areas such as property and life insurance require improvement. Management is emphasizing the company's alignment with national interests and advancing its strategy to become a world-class enterprise. Key strategies include building first-class pension and alternative investment institutions, strengthening active management and asset allocation, increasing allocation to trading shares, and other debt investments focusing on risk prevention and environmental sustainability management, is optimistic about the company's future earnings. Citing no impairment of investments and a strong focus on key business areas such as insurance and investment, the company will prioritize aligning with national strategies and interests while continuing to advance its growth plans. Concerns about inventory buildup or supply chain disruption exist. Our financial summary reveals potential issues with inventory buildup and supply chain disruption. A notable concern is the decline in agricultural insurance premiums income, which decreased by 3.9%. Additionally, individual insurance agents' premiums income dropped by 10.3%, while the insurance agents' channel's premiums income fell by 2.5%. Furthermore, renewal business in the individual insurance channel experienced a significant year-over-year decrease of 5.5%. These declines indicate potential disruptions to our supply chain and inventory management processes. That concludes the financial summary for PICC Group. Feel free to comment below, and I will be happy to answer them when possible.